Welcome back. You're watching On the Record. We're in conversation with Puneet Chhatwal of Indian Hotels. Speaking of expansion and speaking about future growth opportunities, on the disinvestment front, of course, the nearby Ashok Hotel has been put up by the government, and I know that you're one of the contenders for that. How confident do you feel about it?
That's news to me. I did not know that we were contending.
Are you not a contender?
I don't know. We have a little shareholding in ITDC together with LIC. And Ashok Hotel is a very special hotel. It was built under special circumstances, and something you didn't know, I'll tell you today. I spent my initial years of career in that hotel, and I know every corridor of that hotel.
So it would make sense then, wouldn't it?
But it's not, it's not my private company. It's not my own company. So I think we will take whatever decision is there, which is in the best interest of the company. There are very few people, or very few brands, better said, who have the capability to run an institution like the Ashok, and definitely Taj qualifies amongst one of those very few players that are there. It's a very, very iconic asset, and I would say it's maybe the best located asset in this part of the town. And but it's a lot of work in repositioning, redeveloping, and reimagining the Ashok. It's going to be time and capital intensive.
Are you up for the challenge?
Well, not alone, but should we get help from other group companies, happy to take on any challenge because of the change in our business model. We are not into developing and owning assets of that magnitude because there is a lot of space for serviced apartments, and so there is a lot of real estate play in. That's not our business model. Our business model is to run hotels. We will be happy to run the Ashok, but not to do everything else that comes with it.
Speaking about running hotels, and I want to talk about international expansion plans as well. I was talking to one of your peers, and they're now looking at least within the region or close to the region at being able to run properties. You've already got international businesses in play at this point in time. Is that something that you are going to now, with COVID being sort of behind us, aggressively restart to look at?
Not aggressively, but selectively. So we've always done that. Even in the last 2 years, we've opened 2 more Taj properties in Dubai, taking the total to 3. A 4th one will be opening in another 2 years from now. So 4 Taj branded hotels in Dubai. 1 is under construction in the holy city of Makkah. We would look at one or the other strategic European destination. And also once we have better understanding of where our airlines are going to fly to, where we have that kind of competitive advantage, we will look at those, but definitely not to own any assets. We will not buy assets. We will manage third-party assets or enter into an operating lease with an institutional investor, which is a very common model in Europe. And we are very proud to have the Buckingham Gate, the St. James Court in London. The same is with the Pier in New York. And I also feel some nice properties like San Francisco and Cape Town will do us a lot of good going forward. So idea is to selectively expand without losing, or without owning, and without losing focus on our home market, which is the Indian subcontinent. We want to take our portfolio to a kind of size that no one would have thought is possible in such a short term. So if we are today a total portfolio of 240 hotels with 65 hotels in pipeline, the guidance we have given is 300 plus, of which definitely no more than 30 will be outside of India.
Okay.
So 290 as a portfolio will be India-based, and hopefully next year, sometime mid of next year, we will be opening our 200th hotel in operation. So we are at 180 as we speak. So I think all in all, good news for us.
Well, speaking about group companies, and you just alluded to the fact that you will decide on your selective international expansion plan basis the airlines expansion plan as well. Now you, of course, have Air India within the group's fold. What kind of synergies are we already seeing, and what more is to follow?
Well, with both Air India and Vistara, I think we will see a lot of synergies going forward. It's not that we were not in business with either of them.
Sure.
Vistara, the flight kitchen, was almost from every station where we have a flight kitchen business was done by us. With Air India, it was less because of the government tender procedure, with the cheapest one getting the tender. But I think a lot of focus will be in Air India on repositioning it as a quality and a leader in quality. And I think with that, we will have good opportunities in serving hospitality in the air and also serving hospitality on the ground for Air India staff and key customers of Air India. And definitely we will look at synergizing with Air India as much as possible.
Let's address the human capital issue. And as we were just discussing, there has been a significant reduction in the number of people that this industry is employing on account of the pandemic. And the view is that it's not going to go back to the kind of human capital requirements pre-pandemic. There is rationalization and perhaps right staffing, you could call it that. Was the industry overstaffed? Where do you see things in terms of hiring going forward?
Well, I would not say the industry was overstaffed, but the upper upscale and luxury was definitely overstaffed.
Were you overstaffed?
I would say yes, for sure. So we were able to reduce our corporate overhead by 27%, or almost, let's say, 30% adjusted for inflation. But we did not lay off any people, but we were able to redeploy them because of our growth, because of growth within the group companies. As an example, we were able to send some of our people and give them a better opportunity with Tata Digital, because we joined with Tata Digital to be on the Tata New platform. So our people go and do a good job for our brands and the loyalty program in another group company. Similarly, some got good opportunities with, let's say, Tata Trust or Tata Consumer. So we have not only been able to reduce that cost and rationalize it, but also the size of our portfolio has grown. So we have a huge amount of efficiency that has been achieved without, any kind of short-term measures of cutting into the bone, I would say. So I think people got an opportunity to grow. We were able to rationalize costs. We became more efficient. Our margins grew, and there has been no compromise on service. And Taj became the world's strongest brand for second year in a row, and India's strongest brand for a third year in the row. 1 year it was number 2, but as per brand finance. So there is that is the proof whether you are on the right track or not.
Let me end by asking you, Puneet, you've delivered a decadal high performance at this point in time. What kind of pressure is that putting on you? And what is the single biggest risk that you see to the projections that you've put?
Well, I have always said the best is yet to come. So there is no pressure because I've said it myself. However, there are risks around us these days. When we open CNBC-18 in the morning, then we hear the Brent went up, the Brent went down, then we have the dollar went up, the dollar index went down. There is something happening in, the RRR, as I think the Morgan Stanley people said on your channel, the recession, Russia, and the rates hikes. So there are things which are out of your control. So whatever is out of my control, that does not bother. The job of the management is to mitigate through all possible crises. But these are things like COVID. We could not have done anything about it. What we did and how we conducted ourselves, that was under our control. And I think on that front we did well. But I do believe the best definitely is yet to come, and Q3 will be a good judge of that.
Well, we wish you the very best of luck. Always a pleasure. Thanks very much for joining us here on The Record. Appreciate your time. And we hope that the festive season delivers on the kind of hope that you have set out for yourself and for the group. Appreciate your time. That is it on this edition of On The Record. We are going to take a break, but there's a lot more coming up for you on CNBC-TV18 from all of us here. For now, goodbye. Many thanks for watching.